Okay, traders, good morning, good afternoon, good evening, and welcome to the 1009th edition of Short-Term Trading Live with Oscar. And here we go. This is a live class during the day. It's being held on Wednesday, April 17th, and this class is good for trading April 17th at least through April 18th, Wednesday, Thursday, 2013. Traders, as we know, futures trading can be extremely risky and cause substantial financial loss, and it is not suitable for all trading accounts. Always place stops, never trade without the knowledge that there is a lot of risk in this game. Here's what we need to look at. Last night's analysis looked a lot like this. I said, whoa, look at this. The Dow Jones Industrial Average, one of our biggest, of course, bourses in the world. It held here, and it held once again here. The last time we held here, we rallied for new highs. Look, boom, held, a new high gets printed. Last time we held here, we rallied for new highs. Boom, new high gets printed. So we come down and we hold here. The next expectation would be a run for new highs. So bingo, it held, right? But that was last night. Along comes today, and here is what happens instead. So what we're looking at here is it breached, and it's starting to fall apart now. It's starting to get through it. This line fits right here. And we are now starting to get under it. So it's starting to look ugly. So last night it held. Today it's getting through. It looks ugly, traders. And in all honesty, what we're going to see next completely changes the landscape from last night's video. Now, phase 3 that I mentioned, that is still something we absolutely will see. Unequivocally, I believe that will happen because, you know, that's a long-term view. As I mentioned in last night's video, that's coming. That's not here yet. So this is short-term analysis for right here, trading today and tomorrow. The idea behind phase 3, where dollars and stocks start traveling against one another, that absolutely is coming our way. In fact, dollars and stocks right now are trading in different directions. Stocks are down and dollars are up. The last few months, stocks and dollars have been in the same direction. So that will come to pass, but that's slightly longer term view. This is for short-term view, short-term trading today, tomorrow. Let's look forward. So we're looking at the Dow Jones Industrial Average on a daily basis. Let's look at the weekly. On the weekly, as you can see, we are now starting to get below the channel. That's not good because this has been a pretty solid channel for quite some time. And now we're starting to get below that channel. Something we didn't want to see. Now, of course, the market itself is in a big bull channel, right? You can see this bull market. It moves up in that direction. Here is your channel, the green line. So there's a channel there. So the market is bullish, but in a bullish market, you still have times where the market will do something like this and come off a bit, right? And still be in a bull market. Now, I'm not saying that's what we're in for, but I dislike the fact that we're out of this channel, and here's why. When you fall out of those channels on the weekly, sometimes it gets ugly. Look what happened here. So now we're out of the channel. If it stays out for another week, we're likely going to put one of these moves in. That still keeps us, mind you, inside of the bull market and inside of this bull parallel channel. But we might have to suffer a little pullback. Let's see what happens. That's your Dow Jones Industrial Average on your weekly. Let's move now to a daily. Okay, traders, the Dow Jones Transportation Average daily bar chart deemed our leader, the leader of U.S. indices. We thought we were saved a few days ago when it got through and got back above this big parallel channel. And then you would have said, all right, thank goodness we're still safe. But, you know, we had this big down day, rallied back. What I don't like is it rallied back and it hit this channel. And here we are now. You know, now it's starting to build a little bit of formation under the channel. And then, of course, it's been trading in channels. So with that theme in mind, you go like this and say, well, we're in this channel. We're probably going to stay in it, and then we'll see what happens. But once again, like on Monday, today's theme is major support lines are getting breached across the board. And if you want to look at this in a very fast building formation, you can call this a small flagpole, and you can call this a building flag right here. So if that's a bear flag inside of this channel, if that's a bear flag, well, then we have another reason to think maybe it is getting bearish. Now, let's look at the Transportation Weekly. Traders, I don't like to see markets fall out of channels that held for such a long time. And, you know, we are getting into the possibility of the summer doldrums here in the U.S., so maybe there's more coming. Maybe this is a little bit of a crown building here. And maybe with that crown, we're going to see a little bit of a top until it gets down here, you know. Maybe it needs to pull back a little. I'd like to think we're still in the big bull market, this big red channel. We're still in the big bull market having a pullback. But a pullback is starting now to take hold. As of yesterday, if you take away today, it looked like it very well possibly might have gotten back into the channel and started to go higher. And you really could have looked at this and said, ooh, look at this. This is a bull flag. And in that bull flag, it's all right. It just had one breach of the bull flag. And we're right back in it. But when you look at the bigger picture and look at this channel, we're still under it. So the bull flag may or may not be. The breach tells you it probably wasn't a bull flag. We remove it. And then instead we go, well, is that a little bit of a crowning short-term top taking place right here? And maybe that is what's going on. So the tranny's starting to get interesting on the weekly. Let's keep looking. There's a lot of charts to see. Okay, traders, next. As of last night's analysis, I would have thought new highs are coming. Why? Well, this is what I put in last night's video, and here's why. Let's take today and get rid of it. Today's gone. Last night, we get back into this channel. Once again, when we got down to the channel last time, we rallied and put in what? A new high. Bingo. Then we came back down. We got slightly under the channel. When we got back in it, what did we put in? A new contract high. So then we got under the channel and we got back in it, and I assumed here comes a new high, but then you add today in. What happens instead is these new highs, this is not going to happen, and instead we're now coming back under the channel. Now, once again, if you want to look at a fast-moving flag, maybe this is a very fast-forming flag right here, and we might have some trouble. So that's what I'm starting to see now that this day, today, has happened. It really starts to change the landscape of what's going on out there. Now let's look at the weekly. S&P on the weekly. You know, it's starting to fall out of this little F flag thing that was building. I mean, yeah, we can stretch it a little wider if we want. But, you know, it's iffy. It doesn't really show us anything right here. So I go, all right, I don't really see much on the ES weekly. Let's go look at some other charts. You pull the Nasdaq daily and you say, well, it doesn't look terrible. Maybe a little more downside to come. Maybe to here doesn't look terrible. That's what you would say when you first look at it. But, you know, we could also shift these trend lines just a little bit. And if we shift them just a little bit and we remove this trend channel that we think we have here and say, all right, that's a pretty valid line. Let's go over that line and grab a parallel. You wonder if maybe, just maybe, it's actually falling out of a channel right now. Now, I don't really like this channel, to be honest. I think that's sort of fudging it. Although, listen, we all know as analysts, a valid line means you go from one low to the next low and you extend. So we can't fudge the line. But at the same time, this line seems to hold much, much better. And it's a sleeker looking parallel. But my point is, we've already broken through one of them. This one. Now, if the outside parallel gets broken as well, which we're tapping on it right now, we've got a problem. Now, if you go out to the weekly, it's an interesting look. Let's go to Nasdaq Weekly. On your Nasdaq Weekly, you have major support holding, not breaching. Major support holding. Nasdaq actually looks better than the other indices. Now, we've had a ton of people say, Oscar, you're ignoring the fact that this is what you would normally call a head and shoulders. But I just don't, I don't see a head and shoulders in one market when none of the others have it. If you look at the tranny, you look at the S&P, you look at all the other markets, you don't really see a defined head and shoulders. So I haven't been calling it, but it very well could be, and this could be a head test of that head and shoulders. I mean, now that the market's starting to act a little bearish, you see immediately I start looking for bearish scenarios. I think that's what a good trader does. You don't sit on an opinion. I've been bullish for quite some time. The market's starting to flutter. I go bearish. That's it. So if the market is starting to flutter, I put this scenario together and say maybe that's what's going on here, and maybe this is a head test. And if that's the case, well then maybe this is an indication that we are going to have a little top until the summer comes. This is me now switching, starting to switch gears. The market's getting heavy looking. Why wouldn't I? So that's your Nasdaq. Let's continue to look at other charts here. This is getting interesting. Look at what the Russell is doing. The Russell is deemed one of our leaders. The Russell had this weird looking possible bear flag form. I showed this to you in a video a few days ago. We actually sold on this day. Thank goodness we had a decent day. But we got caught trying to sell on this day, and we got caught trying to buy on this day. So for 2 days in a row, we got a little tagged. However, I pulled a little rabbit out of my hat, and right now we're short at a really good level in the S&P. Hello, technical analysis. We're not out of that trade yet, so we'll see. And we know everything is risky, and you need stops, and we lose a lot too. But we're in a decent trade, getting our points back right now. We'll see where it goes. Anyhow, this too, if you want to construe this as some form of a head and shoulders, you can go, all right, shoulder, big flat top head right here. And possibly with this bear flag was another shoulder. So, if we want to stretch the imagination, we can start calling this one a head and shoulders too. And if we're supposed to act bearish, I would start calling it one. So I'm not going into the bearish mode yet. I'm starting to prove out why the market is starting to get heavy. We're doing this together. This is live for me like it is for you, Omniacs. Understand, I'm learning it as you are right now. So anyway, here's the importance behind this chart. This is your do or die line. How markets work is generally when you get into some sort of a rally or a bull market, you do have dips. You rallied, you had a dip. But that dip does not get lower than the previous dip. It just doesn't. That's not how bull markets work. So we're okay with this dip. Then we have another market rally. Boom. And we get another dip. Bang. But that dip is certainly not as low as the previous dip, this one. But here's what's getting scary. We're now starting to get, first of all, lower than that dip, and we're starting to test this dip. This dip happened, another one happened since, and we've gotten lower than that dip spot. We're lower now than this spot. That's not supposed to happen. So as of yesterday, I thought we're saved because, yeah, we got lower, but we turned right around on a big day, and it's a turnaround day, and we'll go up. But then today happens. And today says, oh, no, this is no good. It's going to test this. You are not supposed to take this line out. If you do, you start literally switching from bull camp to bear camp, at least in the short-term view for the next few weeks. So I hope we do not breach the do or die line. If we do, you will see me become an aggressive seller as opposed to being a shy seller, which I'm starting to turn into in the last day, or since this day started, because it's starting to ask me to. Now let's look forward. There's more. Russell on the weekly. Look, it has broken 2 of these wonderfully holding parallel channels. 1, 2. First it broke that one. And if you recall, traders, I did this class for you about 10 days ago, and I said, look, we have a Russell channel. It was actually just a trend line, this baby trend line down here. And then I said, let's connect the channel to it. And as it turned out, that channel sort of caught a whole bunch of good stuff. Then we said, oh, okay, it's a channel. Well, since then, we breached that channel on the weekly. And then we said, well, maybe then we got this channel, it'll hold, and it broke that one as well. So even though we are inside of a big bull market, maybe we're going to get some sort of a pullback. So we need to be cautious here. Let's take a look at another market. German DAX. This is starting to break everything that we thought it would hold. It's starting to get through everything that was sacred. Now, it's through this. It's through this at the moment. It certainly got through this one. Undoubtedly, right? We're through this. So it's starting to, it's breaching major numbers here. You'll go out to the weekly, and you've breached this major red trend line, which hasn't been breached for weeks and weeks and weeks on end. So let's be cautious here. This is starting to just get a little bit, Oscar, pay attention. And I am, and that's what this class is about. So that's your German DAX. Then we have the bond market. 30-year bonds. One of the reasons why I do my best to not take any calls in this market while the Fed is in it is because it does not adhere to technical analysis the way it used to before the Fed got involved. For instance, beautiful head and shoulders. It goes up. That's a bearish head and shoulders. It's a head and shoulders with a bear flag in the right shoulder. And what does it do? It goes straight up. Technical analysis in bonds hasn't been working for the last 3 years. So the only thing that I do see working really are trend lines. And this major trend line seems to be keeping this bond market in check. Right here, I think that we were in class, or we were in session at the OMNI Trading Academy in the chat room the other day, and one of our traders, Ole, mentioned bonds, and I said, I understand you want it to be short, but there's one thing that worries me, and it's this, and I gave him this chart with this line. Interestingly, watch what it looked like. We were here on this day, and I said, the only thing that scares me is this. If we break through that, I think you got blessings. If you hold it, I'm worried. Well, look at once again, like it did in all these other spots, it just seems to hold this major trend line. Bonds once again look like they're coming off. They come down nice and hard from 148 and change all the way down to 145 and change, and boom, they hold, and here's what's happened since that day. Bam, just took off. So you cannot trust the bonds until the Fed gets out to do anything more than hold its trend lines. Bonds on the weekly did break this major support line, which got interesting for a little while, but is this a big bull flag? I mean, I don't know. It's kind of big, and it's on a weekly. That's enormous, and I don't really look at formations on weeklies. But is that some sort of a big bull flag? I'm not sure, but it's certainly something to pay attention to because of this. Make this smaller. Put it here. Take another flag now. Make this a flag, and look what happens. When you fell out of this flag, or I should really, the flag's here. When you fell out of the flag, you had the little pullback, hit the green line, and took off. Well, if this is a flag, it sort of looks like what happened here. It fell out a little bit and then took off. It fell out of that flag a little and then took off. So here, it fell out of the flag a little, but it's now starting to take off. So is this a repeat? Watch out. Bonds are still very, very dangerous if you're trying to short them. Then there's this sick market. Look at the gold. Traders, you got to give OMNI a round of applause for its long-term calls. Not every call is going to be a good one, Lord knows, but the long-term calls, OMNI seems to have a good nose. The first warning it gave us was 1780 in gold, that at the top would be in. At 1680, it made an official call, and we have plummeted since. And it doesn't look like it wants to go up from here. So crazy, that call in gold, but that just tells you that the stock market really shouldn't fall apart. Because the fear factor, the reason why everyone was buying gold for the last few years is they were afraid that financially the U.S. and other economic economies were going to fall off the face of the earth. And the U.S. stock market would be worthless and dollars would be worthless. And they bought gold like crazy. So we can't really be in for a crash in the S&P if gold is doing this, which is why I'm still a very cautious trader in the S&P. I'm worried every day when its sell signal comes up on OMNI in the S&P because it's a bull market, and things like gold going down should make S&P buoyant. So please be careful. This is not a cut and dry, that's it, the S&P is going to crack. That's not what we're seeing here. I'm just starting to show you that, hey, if the market is going to start to point down, here are some things for us to look at. So this video is to help you stay in tune with what happened today and what should be coming tomorrow. Let's just show you silver, because it's not just gold. Silver had flag mania. It was flag, F flag, bear flag, bear flag, F flag, bear flag, bear flag, bear flag, F flag, bear flag. It has just gone crazy. But I will say this, it's definitely moving down, and I don't think silver's worth what it is today. But, you know, it's a spec metal, so in times of turbulence, they'll mess with it, but I don't think silver's worth all that much. The thing we have to watch out for now is this. What held just yesterday is not holding today. It's presenting much more of a problem for us today. Yesterday it held well. Remember, when we removed today's action, yesterday it held well and rallied up out of the hole. And as I showed you, each time we've held here, we've rallied for a new high, held here, rallied for a new high, held here, looked like it was going to rally for a new high, and we're starting to get under that line again, and that is not a good thing. That is very troublesome for me. So be careful out there, traders. Please place your stops. Again, you got to believe in the upside, but right now the market is flagging that you got to be careful, and that's what this class was for. Traders, I hope when we do our analysis tonight that it's still pointing in the same direction. Thank you so much for coming to today's class. I hope this class helps keep you in tune with markets moving forward. And always remember to keep your emotions out of trading. The best thing you can do to help yourselves is remember this, because it is true. Once your stop is in, stops are in, and emotions are out. Rock and roll, and thanks for coming to today's class. Futures trading is risky and can cause substantial financial loss. We do not claim or guarantee that you will profit from the information provided.